Right, good afternoon now, folks, as we head into today's US trading session on Friday, the 30th of June. We'll flick across the headlines, we'll have a quick look at what is going on. But really, these articles haven't updated yet since the PCE figures that we had out at 1:30, which is the main focus of attention today. You can see European shares rose on Friday's lackluster data on China's factory activity spurred hopes of more policy stimulus, so markets up slightly off the back of that this morning. Now we'll have a quick look at some at some eurozone inflation, which did tick down slightly, which also helps that move. Potential for the ECB to be slightly less hawkish going forward. Come through to the PCE figures today. PCE lower than anticipated, which has again spurred that rally in stocks, which we will come around to now in a minute. But if we flick across then the grid, you can see stock indexes higher across the board. You can see US equity futures, European equity futures, Asia Pacific equity futures higher. And you can see yields across the US slightly lower, which is lending some support to equities at the moment. We've seen that correlation break down slightly, but in recent trading sessions, but over the course of today, that is playing out as obviously expectations for the Fed to cool down slightly in terms of the pace of their interest rate hikes, or expectations for them to continue hiking interest rates will then decrease off the back of some negative inflation prints. You can see the US dollar lower for the most part across the board. You can see then across the rest of the currencies, pretty mixed across the rest of them. No clear strength, no clear weakness, apart from sterling. Sterling really the strongest currency on the day. Sterling and Kiwi are kind of half and half. You see them just flicking around, zero change on the day, up against the rest of currencies across the board, but mainly stock indexes are in focus as we head into today's trading session. Now we can see these manufacturing PMIs, markets saying they sparked a rally this morning due to the fact that it means that the Chinese will probably lend more support to the economy in order to prop up growth or boost growth. You can see inflation from France cooled down slightly, which means that there's less of a need for the ECB to hike rates. You come around to CPI out of the eurozone, again lower than consensus, also lower than previous, again showing inflation is cooling down. The unemployment rate stays the same. Inflation can cool down with the unemployment rate not rising. That will be obviously seen as a positive. The core CPI print as well lower than consensus, albeit ticking up slightly, but still lower than consensus. I don't really think markets care too much though. They'll just read anything they can to see if and hope that central banks will stop hiking rates. We've had a raft of hawkish commentary out this week. The second you get a 0.1 miss on any sort of inflation print, it's just through the roof on stocks, which is crazy to wrap your head around if you're working off the textbook in terms of macros. But the trend is your friend at the moment to stay on the same side as the trend, even if you're not 100% sure as to the reasons why it is moving. We can see core PCE in line with expectations, slightly below previous month, but still 0.3% in terms of monthly figures, still far too high. So in terms of markets being like, yeah, great, let's just go long, it's a bit crazy. But anyway, you can see the other metric of calculating this PCE price index, lower year on year from previous, and also then lower month on month from previous. So inflation cooling down slightly as we approach the end of we have reached the end of the as we approach the end, of the ECB. They've changed the number on this, so I was a bit confused there for a second. I thought it lasted Friday. Well, I knew it lasted to Friday, but it confused me slightly there. But anyways, as we approach the end of the ECB's forum on central banking today, that concludes, but we're not expecting anything out of that over the rest of the day. You can see those short-term charts on stock indexes flying higher across the board today, and these lower than anticipated PCE figures continue to push these to the upside. Now S&P, Dow Jones, Nasdaq, Russell all push higher. The DAX, the FTSE, the Nikkei all push higher. The VIX then pushing lower down to 13, which is an extremely low number on that, considering the current economic environment. You can see US dollar weakness, now pretty broad-based US dollar weakness. You can see Aussie, Kiwi, Euro, Sterling. You see dollar Swiss, dollar CAD, dollar Yen, and the dollar index all pushing lower. Dollar CAD not really pushing lower too aggressively, with some underlying weakness in the Canadian dollar. You can see GDP figures back here slightly below consensus and also below previous, showing no growth in the Canadian economy over the course of the month of April, which contributes to this not being able to sustain much downside, as that would mean Canadian dollar strength. As you can see, downside in yields, the 10-year and the 2-year helping push these markets higher. Downside in yields, sparking some upside in gold. Couple that with the lower US dollar, makes a decent bet for some gold higher. We can see an inverse head and shoulders here, maybe potential for a bit of a turnaround as we break through this neckline as well. And that is where we are at heading into US trade today. Stock index is higher, US dollar lower. Let's see if that continues into the close, but I wouldn't go chasing those moves massively, as we do have month-end rebalancing. We do have potential month-end rebalancing, but also quarter-end, half-year end, maybe some potential wild moves as we head into the close today. So be aware of that. Let's see if that has an impact on markets. But we can see then across the board, you can see stock index is higher, US dollar lower, and I wouldn't want to jump in front of that steam train today.